In today's video, we're going to be taking a look at the newest equity REIT in my portfolio, which is VICI Properties, ticker VICI. This is the third video that's a part of my portfolio reveal series where I'm doing an in-depth analysis of all 31 stocks currently in my own portfolio. If you're new to my channel, my primary focus is on income investing and dividend growth investing with holdings that offer at least a 4% yield. As I'll say in every video, this series isn't done in any particular order, so just because this video is third in this series does not mean this is my third favorite stock or my third largest holding. Also note that because I own all these stocks, I am biased towards them, so do your own research before making any investment decision for yourself. Also, let me know if there's any improvements to this series that I can make going forward. So going on to my Vanguard account where I do all my dividend investing, as of the making of this video, I currently own 204.450 shares of VICI Properties stock. So despite this being one of my newest holdings, I've already made a sizable investment in them. Their stock currently pays a quarterly dividend at a rate of 39 cents per share, so 39 cents multiplied by 204.45 comes out to roughly $79.73 every single quarter in dividends. If I divide that number by 3, which is what I like to do to know what exactly I earn each month in dividends, that comes out to roughly $26.57 every month in dividends from VICI Properties stock. VICI Properties is an equity real estate investment trust that owns one of the largest portfolios of market-leading gaming, hospitality, and entertainment destinations in Las Vegas, including Caesars Palace. They also own the MGM Grand, the Venetian Resort Las Vegas, and many other iconic properties throughout the Strip. In total, their real estate portfolio consists of 50 gaming destinations, 4 championship golf courses, more than 450 restaurants, and 59,400 hotel rooms. Their portfolio spans about 15 states as well as Canada, but roughly 46% of their properties are located within Las Vegas. Their stock currently yields 4.82% according to Google, which is much lower than what I've covered in this series so far, but it's still above my minimum of 4%, and the lower yielding stocks in my portfolio, like the VICIs, are the ones that I rely on for long-term growth. With the higher yielding positions I have, the only growth that comes from most of them is from reinvesting the dividends. Although most of them have increased their dividends and have paid special dividends, they're much less predictable. But with the lower yielding stuff in my portfolio, I want to see growth through share price appreciation and consistent dividend increases. So if you're more of a dividend growth investor, then stocks like VICI are the ones that are going to appeal to you more. Fortunately, VICI Properties has been an excellent performer since its IPO. Looking at their dividend distribution history, we can see that since their IPO in 2018, this company has more than doubled their dividend distribution rate. Originally paying 16 cents per share, today their stock now pays 39 cents a share, and they've been able to increase their dividend every year since their IPO. How much they grow their dividend each year changes, but typically they increase it by 3 cents every year. On top of that, this stock has seen a lot of really nice growth in its share price over the years. Since 2018, VICI stock price has grown by about 80%, which is great. Although their portfolio is largely made up of properties in Las Vegas, they still hold real estate assets located across the country. Some of them are in big gaming hubs like Atlantic City, and some are scattered throughout the Midwest. But Las Vegas is their bread and butter, and it's still a really popular tourist destination. In 2022, they had about 39 million visitors who spent billions of dollars. They actually had their most profitable gaming year in 2022 with $8.3 billion in revenue. Thanks to a lot of people leaving the state of California, it's also been seeing a lot of people move into the metro areas around it, which has also helped this industry grow. Their investor presentation has this map which shows all the properties that VICI currently owns on the Strip and the surrounding areas. You can see that there's some gray boxes on this map which say VICI land. This company currently owns 27 acres of undeveloped land that's located adjacent to some of their other properties. At this point, we really don't know what this company intends to do with all these underdeveloped plots of land. They could sell them for a potential really nice profit, or maybe even expand their current properties when the time is right. But yeah, this is a pretty interesting slide. You can see Excalibur, Luxor, the Caesars Palace Forum Convention Center, and some of their other properties. Investing in a REIT that holds entertainment properties might sound like a bad idea given the state of our economy, so you might be wondering why I made the decision to invest in VICI Properties. First off, it's really important to not invest in something based solely off your passions and your interests. I know it can be really enticing to invest in a company that does something really cool, like own properties at your favorite vacation spot, but you still need to do your homework. In my opinion, the absolute worst stock investing strategy I've ever seen, which is even worse than investing in just the highest yielding stocks you can find without doing research, is when people invest in companies based solely off their hobbies without doing their homework. It's a really immature way to plan for your financial future, so it's really important to not be persuaded by whether or not the company you want to invest in does something cool. Fortunately for VICI Property stock, it's not only a cool business that they're in, but it's also a highly successful business. What I discovered about this company and their stock when I first looked into it made me realize that they were very special for a lot of different reasons. Since their founding 6 years ago, VICI Properties has collected 100% of their rent from their tenants. Even during the pandemic shutdown, since their founding, VICI has collected every single rent payment owed to them. That's something I've never seen any other equity REIT experience. There were a lot of REITs that weren't able to collect rent money from all their tenants during the shutdown and the Las Vegas Strip lockdown, just like every other tourist destination in 2020. But despite that, VICI still collected all of their rent money, which attests to just how high of quality their real estate assets are. VICI is also a triple net lease REIT, which is my favorite model for an equity REIT. This means the tenants and not the landlords are responsible for paying for maintenance, insurance, taxes, and a few other items. It saves the REIT a lot of money because they can use those funds to buy more properties or pay more dividends. But I think this chart probably is the best thing to look at when comparing VICI to other REITs out there. Most of VICI's properties offer high levels of financial transparency, and it's a much higher barrier to entry, meaning that competitors aren't able to quickly establish themselves and potentially steal their customers away from them. Even though this company only has 50 properties in their portfolio, you can see that the average rent they collect from each one is significantly higher given the high-profile properties that they own. What's also really impressive is their average remaining lease term, which is 42 years. That means the average tenant is locked into their lease with VICI for 42 years. This is by far the longest I've ever seen for an equity REIT. You typically want this number to be as long as possible because the longer the lease term means the more predictable cash flow. They also have a 1.9% same-store rent growth. This number is also higher than average, and it shows that VICI is able to grow the rent on their existing clients at a rate much faster than the average REIT. Looking at their financials, we can see consistent year-over-year growth for their properties. Adjusted funds from operation, which is one of the most important numbers for a REIT on their income statement, has kept growing for VICI over the years. Since 2018, their AFFO has more than tripled, and over on their balance sheet, their book value has also seen a really nice, consistent amount of growth over the years. It's for all these reasons that I invest in VICI and not EPR, which is another REIT that invests in similar kinds of properties. If you're wondering why I prefer VICI over EPR, considering they have a higher dividend yield and they pay monthly dividends, they just don't have the same high-quality portfolio that VICI has. EPR suffered significantly during the pandemic, and as a result, they had to stop paying dividends for over a year. Today, their stock pays nowhere close to where it used to before the pandemic, and their share price is still down by a pretty considerable amount. So in summary, based upon what we've looked at, I've been really impressed with how well this company's performed. Their metrics have them standing out from their peers like gaming and leisure properties, and I hope that their stock continues to grow even if travel slows down. I'm naturally more skeptical when it comes to investing in REITs that own properties that are heavily impacted by recessions, including casino REITs and hotel REITs. These dividend investments can still be good investments, but not under all economic conditions. So before VICI, I never actually owned either of these types of REITs before, but given everything that we've looked at so far, I've been impressed with this company, and the metrics that I've seen made me decide to make a sizable investment in VICI Properties. But with that being said, that's going to wrap up today's video. If you're interested, feel free to check out my Patreon where you'll find an Excel sheet of all of my holdings updated monthly. You'll also have the option of reading this analysis as well as every other analysis that I do in this series. Plus, it'll give you access to our Discord channel where we discuss higher yielding types of investments. With that being said, thank you all so much for watching today's video. If you liked what you saw, then feel free to hit that like button below and click subscribe if you want to see higher yielding investing strategy content. Again, thank you all so much for watching today's video, and until next time, take care.